following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
It's afternoon, Thursday afternoon, Friday afternoon, and Saturday evening. Broadcast each one of those times, and we're going to be talking about money. 20,000 on the Dow. We hit that on Wednesday, 20,000. We've been bouncing up almost to 20,000. We finally hit 20,000. Do you remember the bottom back in March of 2009 when there were people that were predicting that the Dow was going to go not up, but was going to continue to go down to 1,000? Do you remember those times when things were so negative? Or even following that, some of the conferences that I went to, and I would come back and talk on the radio about the conferences where they were talking about a market that was melting up, and when the Fed quit putting money into the economy, it was going to crash, and we would see Dow 6,000 or 5,000 or 1,000. Well, forecast by people that were really well known, and they were predicting that things were going to go down. Well, yeah, you can never say that they won't. Even at 20,000, you can't say that we won't go down. But it appears we're headed up. And I'm an optimist, so I think that we're going to continue to climb. But more about that later in the program. There was a book that I read called Sonic Boom by Greg Easterbrook. And he took a different approach to life and investing. And one of the analogies he's made was to baseball. And you know, I love baseball. And he made the analogy. He said we live in a baseball fantasy world. Now, if you don't know about baseball, fantasy baseball, it's where you have a number of people, guys and girls, that get together and they do a draft, and they draft existing major league players, and they build a team. You could have a couple Mariners, a person from the Dodgers, a person from the Yankees, a person from the Diamondbacks, the Marlins. You just put together your team. And then each day they play, you look at how they did that day. And you calculate all the statistics up, and you figure out whether you won or lose. Well, the whole thing is, Easterbrook says, it's like a baseball fantasy world that we live in. We're indulged with a tremendous number of stats. We live in a statistics. You know, in baseball, what's happened, if you read the book or watched the movie Moneyball, you see that baseball's become a lot of a game about sabermetrics, where you have people calculating the value of players. At Rotary on Wednesday, Jerry DePotos talked, and he talked about the trades that he's doing. He did 36 trades over the last 2 years, 11 trades this year, and he's looking at sabermetrics. And last year, for a team that won 86 games, he talked about having a team that had 15 players that had negative WARs. Negative WARs. It's a statistic. It's wins above replacement. What that means is if you take the average player at that position, an average second baseman, for example, and compare it to Cano, who plays for the Mariners, that you can calculate how many wins Cano brings to the Mariners. Now, the Mariners last year had 15 players who had negative WARs. This year, we have only one. So it's going to be interesting to see how the sabermetrics work out. But that's the kind of world we live in baseball, but it's the one we live in too. And when you think about it, the Dow is up 3% one day, it's down 1.4, it's up 4.6, it's down 7.2, it's up and down. You know, the fact is the economy is not changing that much. Corporate earnings are not changing that much. Corporate revenues are not changing that much in a day. So what is it that the Dow is up 5%, down 3%? We live in a world where there's multiple statistics. We live in a world where you have every day a multitude of new numbers coming out, evaluating the economy, evaluating how people are working, how many people aren't working, what the debt levels are, what the corporate profits are. And if you look at where we came into 2016, you know, people talk about the current rally as being the Trump rally, but if you look at where we came into 2016, the economy had been doing well from the beginning, even from 2015. It's not a barn burner economy. It's not doing 4%. But then if you look at the time period when from 1982 to 2000, the economy was doing about what it was doing the last 8 or 10 years, 2.5%. And the Dow during that time, from 1982 to 2000, went from 1,000 to 10,000. So if you look at 2016, you had an economy that was doing okay. You had debt levels, average debt levels that had been coming down. You had corporate profits that were setting new records, cash levels that were setting new records. Revenues of major corporations were hitting new levels. Unemployment was coming down to 4.7%. You know, all those numbers. And yet we live in this fantasy baseball world where you can look and find any number of statistics which don't support an economy that's doing well. I was at a conference where one of the speakers mentioned there were 93 million people that were out of work. And I raised the question. I said, really? 93 million people? But if you calculate everybody over the age of 18, 93 million are not working. That's the statistic. It's a real statistic. 93 million people are not working. The issue is what goes into that, because you have all the college students that are not working. They go into that number. All the people that are retired are in that number. The housewives and the house husbands, they're in that number. So saying that 93 million people do not have jobs is not saying 93 million people are unemployed and looking for work. It says 93 million people are not part of the labor force. Now there are, 5% or so of the people who would like to have a job, that are looking for a job, that are not employed. Some of those are on a short-term basis, some on a longer-term basis. But to use a statistic that 93 million people are out of work, or not working, is one of those statistics which can be bandied around and made to look things poorly. When I began in this industry 30 years ago, there were very few statistics. We didn't have a lot of computers at the time. We were beginning to reach the point where we had personal computers, but that was just at a beginning. People looked at a very few number of stats. We looked at money supply. We looked at the inflation numbers. We looked at labor rates. We looked at GDP. We looked at deficit, both the federal and the trade deficits. We looked at the Dow and the Standard & Poor's. We looked at a few numbers, but we didn't look at a large number. Today, there's hundreds of indices and data points, and they're revised on a daily basis. People look at the charts. People build what they call stochastics, candlesticks. They build all these mathematical charts, and I'm a mathematician, so I like to look at this stuff. But does it give you that much information? No. And we become so news-oriented. 100 years ago, maybe 120 years ago, when you had a major incident in New York, it took a week for the news to travel to Seattle. It took a week. In the 1950s and 1960s, there were 3 TV stations. And in those times, some of them were in black and white, and sometimes you had snowy reception. I remember some of those times. You had nightly news, which was condensed into half an hour. And I grew up in Bend, Oregon, where only about and I had a paper route when I was in junior high school. I had a paper route. I walked from one end of the town to the other. And only about 1 in 10 houses would subscribe to the Oregonian. They got national news. A lot more people subscribed to the Bend Bulletin, which was focused on local news, so the news was confined to Bend, Oregon. There were 3 lumber mills, and one was closing down as I was growing up. And that was the major employment in Bend. The news, a lot of people got their news from Life magazine, of all things. I mean, that was what it was. Today, you have 24-hour-a-day news, not on one channel, but on multiple channels. You're getting feed. If you have a large car accident in Pennsylvania, you hear about it within minutes after it happens. The news travels very rapidly. And that is not just news like a car accident. You get to see what's going on with ISIS. You get to see what's happening in Syria. You get to see what's happening in the rest of the world. You get to see what happened in Orlando. You get to see San Bernardino. It creates a tension and a fear. And we're going to come back to this after the commercial. We're coming to a commercial break because all of this has something to do with investments, and I want to bring that point home. So don't go away. I'll be right back after this commercial break.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Did you know the 20-year annualized S&P return was 8.19%, while the 20-year annualized return for the average equity mutual fund investor was just 4.67%? That's a gap of 3.52%. It doesn't sound like much now, but it could mean the difference between retiring in comfort and running out of money. For some seniors, a gap that large could cost them hundreds of thousands of dollars and cut their retirement short. Don't run out of money. Call Mike Adams of Adams Financial Concepts today, 206-903-1019, and learn more about how you can, 1, create wealth for retirement, and 2, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
Show.com.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
And not only visit adamsfinancialconcepts.com, but I will be at the boat show. I'm broadcasting between 12 and 1. Come by and see me at the boat show. Tune in and listen to what I have to say. I'm going to have some predictions as to what I think is going on with the economy, what's going on, and where we're headed with this year and beyond. But I started to talk about, and I'm going to talk about a lot of that today as well, I started to talk about the information and the statistics that we have today. We live in a baseball fantasy world where you have all these statistics, some good, some bad, and it's something completely new. With the advent of the internet, it's created information which is not verified. It just continues to roll out. If you look at the 3 major TV networks, from 1948 to 2015, they had fewer than 2 million broadcast hours. Today, in the internet world, YouTube does more than 2 million hours in less than 3 months. I mean, that's how the world has been changing. And much of it is misleading. There's such a vast amount of information. A lot of it is misleading. Even when you look at programs on TV and magazines predicting where things are going to go, I think it can be really misleading, stressful, and it can lead to wrong decisions. I've been talking since 2009 about some of the things I think are going on worldwide in the economy, which are from a mile-high standpoint, when you look at what's going on, are trends that are affecting what is going on in the markets today. They've been going on. They will be going on for some time. You know, when I go to conferences, there's a number of speakers who are talking about investments and what you should invest in and what's going on in the economy. And I always take notes, and I review those notes when I go back the following year and when I hear those same people speaking to see how they did and how accurate they were. And it's amazing to see the number of people that will go to the conference, get all inspired by what somebody says about buying this stock or buying this mutual fund or shorting this or whatever they might want to have. And then to see them go back the next year having lost money in that mutual fund or with that stock and listen to the same thing, you get so inspired by the same person and go out and do exactly the same thing. The number one recognized financial person in the country, maybe in the world, is Jim Cramer. Barron's has done a study on Cramer showing that his returns are really poor. Really poor. And they did the study so to the point that they're not mentioned at all on CNBC. They're not allowed to advertise. They're not allowed to be quoted. CNBC was not very happy when they evaluated Jim Cramer. But that's a whole nother study, a whole nother program. Since 2009, I've been saying there's some things going on in the world that are driving what's happening. Standard Chartered Bank of the UK did a big study, and they found that there's been 3 major super cycles. The first one lasting from 1870 to 1913, driven primarily by the industrialization of the United States. The second from 1945 to 1970, driven primarily by the rebuilding of Europe and the infrastructure within the United States. And the third supercycle began in 2009. And that's underlined. And what underlies that whole thing is the fact that by 2020, we're not that far away. We're 4 years away, essentially. From 2020, the prediction is that 93% of the world's middle class will live in emerging nations. I once had a client, he's gone now, but he was working for American Standard that makes toilets and makes showers and so on. He was transferred to Tianjin, China, and he was in charge of a plant that was making toilets and showers and bathtubs. And he said the employees there had never used a toilet. They'd never seen a toilet. They'd never seen a shower. They'd never seen a bathtub. That was at a time when those people were living at subsistence levels. Today, in China, their middle class is larger than the entire population of the U.S. There's an emergence. The number of people that are emerging from poverty has been accelerating and continues to accelerate, so that those people are buying those toilets and those showers. They're buying our lattes. They're buying our cars. They're buying products that are being made. They're buying our phones, our smartphones. That's happening worldwide, and that's driving this supercycle when the economy is growing. The worldwide economy is growing faster than average. That's going to continue to go on for some time. Those cycles last for decades or a couple decades. I talked as well, beginning in 2010, about Dow 100,000. Dow 100,000. 1982, the Dow was 1,000. 2000, 18 years later, it was at 10,000, a tenfold increase. I talk about, when you look at something, if you take 1 penny and you double it every day for 30 days, you know how much you have? 1 penny doubled every day for 30 days. At the end of 30 days, you have over $10 million. Over $10 million. But half of that comes on the last day. 3/4 comes on the last 2 days. 90% comes in the last 4 days. You don't really see the acceleration until you reach the knuckle in the curve, where the curve really begins to go. So as we came out of the recession, the Great Recession, it's going to be a while, but we're on our way. If you look at the Great Recession, we were down to 6,600 in March of 2009. Today we're at 20,000, and I believe we're on our way to 100,000. Not in the next year or two, but we're on our way there. And I said it's all going to end probably in a period of stagflation. I've said inflation, but I'm concerned now that it could be stagflation. If you look at what's going on with our new president, there's going to be a stimulus package. They're going to reduce regulations. They're going to cut taxes. All those things are positive for the economy. Usually you do that during a recession. Never before have we done that when the economy is clicking on most all cylinders. So, and we may have launched on Thursday, January 26th, we may have launched a trade war with Mexico, just the beginning. All those things are going on. I think they portend investment strategies where you can continue to make money, where you can continue to do well, but it's being in the right place at the right time. Putting all of it together, in 1982, the Dow stood at 1,000, and there were predictions that the Dow was going to drop 30 or 40%. In the year 2000, the Dow stood at 10,000, and the predictions by at least one author was the Dow was going to be 35,000 within 4 years. Didn't happen. The Dow instead went the other way. Being in the right place at the right time is the way you need to be in difficult times. Anyway, that does that. I'll return to the baseball, and I want to talk about baseball after I talk to my guest. I have two guests today, both from the same company, and both with a fascinating story and a niche market. You want to hear, I'll let them tell you about it. David Bingham of Pike Place Motor and Cameron Corbin of Pike Place Motor Limited.
First, let's say that it's Park Place Motors.
Oh,
Remember that game that we used to play?
I do.
With Boardwalk and Park Place? Well, we are Park Place.
I'm sorry.
ParkPlaceLTD.com.
At least I got the David right.
That's right. And I'm going to call you Mike, so we'll be okay.
Welcome to the program. David, why don't we talk about your background a little bit? Because you didn't start in the car business.
No, I grew up in Spokane and came to the University of Washington to go to college, and not knowing exactly what I was going to do, took business and ended up graduating, getting married, and went to work for KOMO Television, pulling cords and doing commercials, and I worked my way on up to a salesman from that. And as a matter of fact, as a salesman, I kind of did very well by having all the car dealers. I was the guy who handled all the car guys, because back in high school in Spokane, if you didn't have a hot car, you were not going to get lucky. You weren't going to, you had to have the right car. Of course, we had no money, but nevertheless.
I guess that's why I was never lucky.
Yeah, well, me either. But anyway, that was a start. Came to the University of Washington, as I said, and went to work for KOMO, and was with them for 20 years. Had a very interesting time, and in the meantime, I was building apartments and doing a lot of other things. And after 20 years, I thought, well, it would really be a lot more fun to just did not have to work for anybody and do my own thing. So I did that, and about 3 years later, my wife informed me that I was driving her crazy, being home all the time, and so why don't you find something to do? So met a friend of mine who we'd gone to grade school together, high school together, and roomed together at the University of Washington for some time. And he was buying cars in California and selling them up here on the wholesale market. I played around with that for a couple of months, and discovered we could make a lot of money doing that. And so we started fooling around with cars, which was our first love. And that gradually, and that was 30 years ago. So we were in Kirkland then, and then we moved up into Bellevue, and now we're a $50 million a year car business, handling. We're in a very niche market with luxury cars, collector cars, luxury cars, collector cars, and
we're going to come back right after commercial
Okay.
break and learn more about Park Place.
okay.
More About Money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I'm here with Cameron Corbin and David Bingham from Park Place Limited. I got it right this time.
Park Place Motors Limited.
Park Place
That's
Motors. Okay. So it's in the car business, and you got into this. I walked through. You have some amazing, amazing cars. So tell us about the business. Tell us about the cars.
Well, we are car guys. We are just plain car guys. We didn't get into the car business just to sell cars and make money. We got into it because we absolutely love and are enthralled by what we do. And granted, we started doing a lot of the collector cars and kind of high-end, exciting cars. Didn't have a lot of money then, but it kept building and kept building. But there was a real niche market that was available to us because there weren't people doing those kind of cars. Everybody, all of the car dealers do regular cars. They're just widgets. How many widgets can you sell? Mm-hmm. And with us, it's how can we get the really cool cars that somebody's going to come and buy, because somebody always comes to buy the really cool cars. So our motto was kind of no one has what we have, period. And we're known around the world and around the United States for our collector cars, and that's what we have evolved into. You hear about the car auctions that have just finished, like Barrett-Jackson. We're their largest consignor. I think we've done, over the years, over 700 cars with them.
Well, you just recently did 50.
We just recently got done doing 50 cars down there, which is a huge effort to do. We take a group of our employees down there to do that, but you get a feeling for the market. That is our kind of market. There are collector cars there. There's everything, but it's mostly our kind of stuff. We go there not only to sell cars, but also to buy cars and to meet people and understand what's going on in the marketplace and how could we be smart enough to buy the right kind of cars and where is the market going. It's all about where the market is going, because a lot of the people who buy our collector cars and our exotic cars, they buy them as investments, and some are good and some are bad, just like stocks, whatever. But there are cars you can buy, pay a lot of money for, and in 4 or 5 years that car could double, triple, quadruple in value, just like stocks. Other than the fact that you can't drive your stocks, you can have a lot of fun driving that old Corvette or that Aston Martin or that whatever kind of car it is, and then in the end, you can usually sell it for more, because that's the way those things go, and we're very good at that business. So we try to follow the market, buy the kind of cars that will do that, and we have at any one time over 200 cars in inventory in our, undercover in our shop over in Bellevue. I wouldn't say shop; it's a little bigger than a shop.
It is a little bigger than a shop.
We've got about 50,000 square feet undercover, and we've just moved, thanks to our lovely Sound Transit folks who forced us out of our best area we could ever be in, but we're close.
So you have race cars as well.
We have race cars. We don't specialize in race cars, although we, as a family, my son, myself, we have been very interested in racing for a long time. So we do have some race cars, but we have cars that are racy cars. You do the Lamborghinis and the McLarens and all of those, the really fast racing cars. We have those, and those do race. But we're not primarily a race car company.
But you have such a eclectic set of cars. It's
That's because we're eclectic. My partner and I are just two old eclectic guys, and we have a lot of young people, like our gentleman here with us, Cameron, who kind of give us a different look on things, and they keep telling us, no, don't get those old 60s cars, those are, that's from the old days, but also when we started this, the old cars were the classic cars, the brass era cars, which we don't know anything about. I don't want to. All those guys died and they're gone. On the other hand, the Duesenberg at Barrett sells for $800,000, and the guy who sold it made like $400,000 profit. So that's there is that, but we have to always look toward what can we buy and how much can we buy it for, and what can we sell it for? What's our upside?
And there's a nostalgia about some of those old cars, the 57 Chev, the 6,
There's a huge nostalgia. Everybody had one or wanted one or sat in the back seat of one watching the drive-in movie, and now there are guys our age that want those cars again, and they want nice ones, and there's a huge cult of people out there doing it. There are 400,000 people come to Barrett-Jackson and come to these auctions that are in Arizona that just finished a week ago. Think about that, 400,000 people. So these are all people that are car people that are interested in this kind of thing. So there is a real market for it. And we don't only do the collector cars, but we also do modern luxury cars. We're an Aston Martin dealer. We're a Lotus dealer. We have in the past been a Bentley dealer, but they were a little uptight for us. We don't like to wear a coat and tie to work. We like to be there in the summer in our flip flops and flip flops and shorts. But it's low key. But we also do a big business in newer 2, 3, 4-year-old luxury cars.
So you've been doing this for a long time, and you have a very large collection of cars. But I'm sure that most of the cars are not, or a lot of the cars are not sold here. You must have a national presence as well.
We have a very large national presence, and probably now maybe 70% of our cars are sold over the internet. Not that it means internet all across the country, across the world, but yes, we do. We ship cars all over the country, and we ship cars to Europe. We ship cars to Japan. We're trying to work with China. That's a little more difficult situation, because you can't have a car that's over a year old or something. I don't know. They have different things, but we focus on what we can do. But we have cars that no one else has, and that's why we are in this kind of a market. If somebody wants a green GTO, 4-speed car, and we have one, that's the kind of stuff we have, and they're going to find it. With the internet the way it is today, if you get on the internet and look for a car some particular car, and if we have that car, they can find it.
So, talking about the internet, let's get Corbin involved. Cameron, so you put together a lot of the internet stuff, but when you get on the internet, it's more than just a description of the car. There's pictures that go in. So tell us about how you came to that.
Well, having the internet presence means that you don't have to just describe the car anymore, and people don't have to look at a magazine ad of one car or a picture of just one angle. Now people want to see everything all at the same time. They have a attention span that's 8 seconds long. So if you put a video out or something, you really got to keep it short and to the point. And then if they're still interested, they'll link from there. You always, no matter what you put out, especially on social media. You always link back to more information. You got to catch people and let them know what's there in a very catchy, quick way, and then allow them to get information. Don't force it on them, because people want to see it. They want to relax, and they want to casually look at something, especially if they're not on the internet at that moment in search of something at that time.
So you have a unique story about the guy that does the photography. Tell us about that.
Yeah, when with automotive photography, you can't just get anybody that knows how to take pictures, because they're just not going to know what to take a picture of. And the gentleman that we found, Charles, to come in and take our pictures, he actually had come in because we had an Aston Martin 177, which is about $2 million, very limited edition car, and it was in our Aston Martin dealership, and he came in to take some pictures. I got talking to him, and he he was actually looking for something. So when something happened to come up a couple weeks later, I looked him up, found him, brought him in, and he filled this niche of being able to find, to know what to look for in a car to photograph, because that's what the person who's looking for the car is going to want to see. So when he was standing there waiting, he points over to the Chevy on the side, and he goes, "Hey, is that 57 Chevy with the 257 perforations of the Chevy symbol in the dash?" And I look over, and I'm like, "Why do you know that? Why is that something that you happen to know?" And we walked over, and sure enough, it was. And so that's the kind of thing that when he's out there taking pictures, he knows to pay attention to. And everyone wants the standard, 3/4 angle, side angle, rear 3/4 angle. You gotta get the regular ones out of the way. But then those aren't necessarily the ones that emotionally tie you to the car. You want the far away angle, with the cool background, whatever it is. You have to have that emotional tie, and a lot of that you can find on Instagram. That's kind of what that platform is for, is sharing your environment and sharing yourself. But putting our stuff on there and having that automotive enthusiasm behind him as a photographer is great.
Somebody could get on our website and look up any car, and there are, 20, 30 pictures of that, and a huge description, and it even goes into Carfaxes and everything. I mean, it's just, nowadays, you never used to be able to do that. This day and age, people they don't have to necessarily travel to your place to look at that car. They can really get an idea of a 360 view. We can actually stand in the showroom with a camera and show people that entire car. They may be sitting in somewhere in Joplin, Missouri.
So tell us, what is the website? Because we're coming up to a break.
It's parkplaceltd.com. www.parkplaceltd, like Park Place Limited.
And if somebody wanted to find you and come look at cars, where would they go?
They would come to Bellevue, kind of Auto Row, right by the BMW dealership, and the Jaguar Land Rover. We're at 1880 136th Place Northeast, right out on North of Way there. We're close to Microsoft and all those places.
So it's a fantastic place. It's a fantastic setup. Great cars.
It's the place that the fathers, take their sons on Saturday to come out there, and so we get them going. I mean, it's a museum. Our place is actually better than a museum to come and see, because we have more stuff than most auto museums have.
Anyway, we'll be right back after commercial. Don't go away.
Stay tuned. About Money returns in a moment with Mike Adams here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
How do you picture retirement? House on the beach, small farm in the country, traveling the world with your spouse. The one thing you don't picture is running out of money. Retirement dreams are shattered all too often by poor investment choices, sending many retirees back to work. If you think the job market is tough now, try entering it after you've retired. Don't run out of money. Start planning now. Call Mike Adams of Adams Financial Concepts today at 206-903-1019 and learn more about how you can create wealth for retirement and, probably most importantly, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So I'm here with Dave Bingham of Park Place Motors Limited. We ran out of time before the break. I want him to tell you just about the shop, because it is impressive and something to see. So I'm going to let you
All
talk
right. Well,
about all that
thanks,
you do.
Mike. I guess when you have 50,000 square feet of showroom space and you sell as many in the type of cars we do, we also have, we are just finishing an absolute state-of-the-art service department. We've got 15 service lists. We work on everything that we sell. We have a complete detail department. We have a hand car wash, which are few and far between, so none of those bad brushes touch your car. We have a wheel repair, and we also do automotive restoration to some extent. A lot of that's for our own auction cars, but a lot of it's we've restored some cars for some pretty famous people as well. But we've been doing it for a long time, and we have some absolute master craftsmen, and our service department is 28,000 square feet, and it is state of the art. It's almost finished.
And you do consignment as well.
Well, we're very big in the consignment department. We sell about 85% of our consignment cars within 90 days, and probably a third, or a little less than a third, of our inventory is consignment cars. And we're particular about what we take, but we're particular about it has to be fixed and done and everything before we even put it on the floor. So it's an interesting business. No one else does what we do in the country the way we do it. We are very unique.
And very special, and something to see. Fathers take your sons.
Yeah, that's
Fathers
it.
take your
It's our
daughters.
business, yes.
Mothers take your sons. It's a great place to go. And like that, Adams Financial Concepts is very similar in many ways. But anyway, I want to come back to baseball. In the modern baseball era is considered 1903 to the present day, a little over 100 years. From 1903 to 1950, there were 7 players that hit over 400. 7 baseball players hit over 400. That was their average. And they did a combined 12 times. That was between 1903 and 1950. Since 1950, there's been no one that's hit 400. Not a single person hits 400. If you look at the average that the players had, if you combine all their averages together, between 1903 and 1950, the average was between 250 and 260. So that meant about a quarter of the time they went up and they got a hit. If you look at the average from 1951 until the current day, the average is between 250 and 260. But no one's hit over 400. So what's happened? If you look at the standard deviation, it's dropped from 40 in 1921 to 26 in 2003. That's a standard deviation is a nice statistical number. It means if you look at the bell-shaped curve, one standard deviation plus or minus one standard deviation means that 66% of the time the number's going to be between plus and minus one standard deviation. 95% within plus or minus 2 standard deviations. 99% within 3 standard deviations. And 5 standard deviations means there's 1 chance in 3.5 million. So what's happened? Why have we not seen a 400 hitter in baseball? You look at Edgar Martinez, who may make the Baseball Hall of Fame. 3 times he was the batting champion. You look at some of the players that have come up and hit well, but no one has hit 400. 400 is 4 hits every 10 times you go up to bat. Credit Suisse did a report. Michael Medusum, Dan Dollahan did a thing they called Alpha and the Paradox of Skill. They looked at just large cap mutual funds, but what they found is that in looking at money managers, the standard deviation since 1967 has declined by over 16%. Same thing as we're talking about in baseball. The standard deviation has shrunk for money managers. Eugene Fama, who shared the Nobel Prize in 2013, wrote a paper along with Ken French and said luck and skill in a cross-section of mutual fund returns. And they said only 1% to 2% of money managers display significant skill. Fama says 7% of money managers earn their fees, which means, in terms of Fama and what he shows, is that only 7% of money managers do as well as the market when you calculate their fees. 7%, 93% do worse. Pastor and Stambaugh and Taylor wrote a paper called Scale and Skill in Active Management published it in 2013, and they said what's happening is there's a rising skill level in money management. Now, if you look at baseball players, if you look, as late as the mid-1990s, you had a pitcher like Mike Moore for the Mariners who threw the ball at 95 miles an hour, and that was extraordinary, 95 miles an hour. Now 95 is almost average. They're talking about players who throw the ball over 100 miles an hour. That means from the time the ball leaves the pitcher's hand until it hits the catcher's mitt is between 0.3 and 0.6 of a second, depending upon the type of pitch. That means the batter has to make a decision almost instantly whether he's going to swing at that ball or not. The speed is picked up significantly. So the skill of those players that are playing in baseball today is much higher than it was 20 years ago, much, much higher than 40 years ago, and much, much, much higher than the 1920s. If you look at the pitchers going back to the 1920s, the Dizzy Deans, the Daffy Deans, those kind of players, they would not only pitch the first game of a doubleheader, sometimes they would pitch the second game of a doubleheader as well. Today we've become specialists. Today we have the relief pitchers who come in and pitch one inning or pitch one out, and it's become a very specialized, highly skilled game. The same is true of money managers. It's more and more difficult to find the very skilled. Actually, I would say it's easier to find the very skilled than it is to be very skilled. Very, very few players are doing well baseball-wise, and very few managers are doing well. Warren Buffett said at one time, you don't pay the same amount of money to a manager or to a baseball player who's hitting .230 as you do to a player who's hitting .316. I think that's also true for money managers. The money managers who are very good are the ones who should get paid more. That's just because they do very well. So why shouldn't I say that? Anyway, I'm going to be at the boat show on Saturday from noon until 1. And if you're listening to this program at 6 o'clock on Saturday evening, I've already been there. So it's going to be at the boat show. If you haven't been to the boat show, you should go to the boat show. It's a very interesting thing. And if you haven't been to Park Place Motors, you should go there too. Take your family out. Take a picnic. It's fascinating to see. And if you want a really cool car, that's the place to get it. Have a very great weekend, and I will be back next week with more about money.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on AdamsFinancialConcepts.com. That's AdamsFinancialConcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Business Radio 1300 KKOL,
Part of the Wall Street Business Network.
a service of Salem Media Group. On the
The following program sponsored by Adams Financial